Hey everybody, welcome back to the Market Interest, where we talk stocks, finance, and the markets. Gas prices are killing us right now. It's up over $4 a gallon out of nowhere. On Thursday, it was $3.80 a gallon in Connecticut, at least, and now I think it's up to like $4.20 a gallon. Like, come on, a 50-cent rise within less than a week. This is crazy. What is actually going on? Why are prices so high? What can we do about it? Is there anything we can do to hedge our bets against what's going on? And go over one energy stock that I think is a really prime spot for us to make a really good return. That's what I want to cover today. So let's get right to it. So why are gas prices so high right now? Well, we have to think back to 2020. Everybody was in lockdown. People weren't traveling. They weren't flying anywhere. They weren't going to work. And so what happens is the producers of oil, gas, they slowed down production. There's no need for them to produce so much. It costs them a lot to produce it. And if they're not seeing a return from it, then obviously they're not going to produce as much. Production slowed down, and then inventory dwindled down as well. But now people are moving out and about. They're traveling. They're going to work. There's a higher demand for energy right now. So inventory is low, but the demand is really high. And it's hard. It takes time for companies to produce more oil, more gas. That's where we're seeing a little bit of a crunch, and not just a little bit. There's a huge crunch right now. People are really feeling this. There's two factors that really hurt the amount of inventory that we have. One, the U.S. did shut down certain pipelines that could produce more oil. So we have to take some personal responsibility ourselves and say, hey, you know what? We probably shouldn't be relying on other countries as much for energy when we have enough here to produce it for ourselves and make it cheaper for everybody. Number two, there's a war going on between Russia and Ukraine. Russia is a major producer of energy in the world. They've got a huge resource, a huge reserve piled up, about I think it was 25% of the world's energy. They're a massive producer and massive supplier. You know, the US and many other countries, Switzerland, Australia, South Korea, Japan, the EU, they've all been putting sanctions on Russia. So they're under a lot of pressure right now. Even companies like BP, they're refusing to even purchase the oil from Russia. Now, this is going to affect our gas prices as well. If we're not able to take the gas that Russia's, honestly, they're trying to give it away almost at this point for so cheap. There's going to be a really high demand for oil coming from other places. It's not like countries can just flip a switch and then all of a sudden they have the production or the inventory. It takes time for them to produce this, the oil. It takes time for them to produce all this and then get it out to the market. So there's going to be a lag, and I wouldn't expect prices to go down really anytime soon. And you can tell Russia has their back against the wall. I was just reading an article. This is from oilprice.com. One of their authors wrote that Russia is actually seeking to prosecute some companies because they're not doing business in Russia anymore. Larger company, they have some subsidiaries in Russia, and they're not doing business with them. Then technically that could be putting that company out of business, could be putting them into bankruptcy, and that's considered a criminal liability under Russian law. So Russia's pushing back on some of these companies, saying, "Hey, we're going to prosecute you." Now, let's just take a peek at oil prices. Let's take a peek at their history here. If we go back to April, WTI crude was under $60. It was $57. Within a year, we're now seeing prices at almost $125. Which is it's just an astronomical gain within a short period of time. Like it's putting a lot of pressure on people. It's hurting people. It's hurting our economy. It's hurting the wallets. So I'm hoping that things change soon, but I can't hold my breath. Like I don't think that things are really gonna change that quickly. I think there's too much political tensions happening right now. I don't see this changing overnight. I hope it does, but I don't see it changing overnight. So I think the major question a lot of people have is like, what can you do about this besides stocking up on gas and throwing it in your garage, right? So what I'm doing is taking a different approach and saying, hey, I realize that this industry is going to be, or I believe that it's going to be pretty hot for a while. I think there's going to be some opportunities here. I don't think prices will be this level forever, but I think that they could be higher for a little bit longer than what people do expect. Personally, don't think it's going to change within a 2-month period. I think this could be a couple quarters where we're seeing some inflated prices. If that's the case, then I might as well invest in some energy companies that have strategic plans to increase their revenue, increase their profits. So that's what I'm doing. And the one company I want to share with you guys this evening is Gran Tierra. Now, there are a couple things I want to point out about this company before we really get rolling, guys. Number one, they are a smaller cap company. So their market cap is 561 million. You have to know that we're not working with like these multi-billion-dollar organizations. This is really smaller area, smaller production, but really good prospects. If you take a look at their 1-year return, they're looking at 102% over a 1-year period, which is knocking it out of the park. Even just last trading day, they were up 8.5. Year to date, they're up 101% as well. So they have some massive returns within a shorter period of time, and within a 6-month period, you even see that their returns are 163%. So if you're buying and holding this company for a little while, there's some opportunities to catch a shorter term gain. But you also have to be aware that, these types of companies, there's a lot of volatility within them, especially within this sector, especially within this industry. There's a lot of volatility within the energy. It's very, very cyclical. And so you just have to plan it properly. You have to do a lot of research beforehand and make sure you're diving into the right company. Now, I like this company specifically because they're doing a lot. They have a really good operations in place and good cash flow from their operations. If we take a look at their most recent report, their 2020 outlook, they said that their Colombia operations represents 100% of our production. Now they're going to be putting forth, it looks like, between 160 to 170 million dollars going towards their Colombia production. Now this next line is what really sold me on this, guys. They said that they expect their 2022 capital program to be fully funded from cash flow from operations. That's exciting. So they don't need to raise capital from, issuing bonds. They don't need to go to the capital markets and, issue stocks. They're doing this internally. So they're collecting revenues from what they've already received, revenues from their operations, cash flow from their operations, and using those resources instead to develop that. So that's building more value. That's creating more value for their shareholders. So that's where I think that's an exciting line that I'm hearing. Now, if we check out their profitability, let's just look at a few other factors. So their valuation, let's start with that. Valuation looks like they've got a forward multiple of 4.37 when it looks like sector median's around 11. So it seems as though they're undervalued just based on their price to earnings. Gross profit margins at about 70%. Net income margin about 9, which is 42% higher than their sector median. So that's good. Levered free cash flow, 16%. I think they just had an earnings report recently, so let's check that out. They beat the estimate by 15 cents a share. Now, keep in mind, this is a really inexpensive stock. The stock's $1.53, guys. So, really inexpensive. So for them to beat it by 15 cents, that's a higher percentage. When we're talking about, $1 stock, $1.50 stock. Now, taking a peek at Seeking Alpha's quant ratings, they're giving this a strong buy, 4.99. Can't get much higher than that. And they're also saying, and that shifted not that long ago, too, when they started saying it's a strong buy. Seeking Alpha is ranking this number 2 out of 73 in the industry altogether. They're ranking this stock number 4 out of 252 within that sector, and number 5 overall. That's pretty impressive, especially for a smaller cap company like this. And they're comparing that with over 4,400 other stocks. It's impressive. I'd say proceed with caution. You definitely want to do your due diligence, really review the financials on this company. There's a lot of risks inherent with this sector. So, proceed with caution, but I personally think that there is some good opportunities here. There's some really good opportunities here as long as you are proceeding with caution. This isn't something that you should have like a massive holding within, but maybe it's a small portion of your portfolio, a sliver of it, just some way to hedge against all the costs of the rising energy prices right now. If you can make a few bucks on a stock like this, I think it can make a difference for you. If you have any questions, if this should be, any questions about the stock individually, or if it's appropriate for your portfolio, feel free to click the link in the description down below. We can set up a time to have a free consultation. We'll talk it out and see if this is something that is appropriate for your portfolio. And if so, how much should we be allocating into a stock like this, or if there's some other more appropriate options for you instead. Don't forget to like, share, and subscribe to the channel. You can join us for any conversation on our Facebook page if you go to the Market Interest on Facebook. Unfortunately, we can't have comments on YouTube due to compliance reasons, but we can definitely do that up on Facebook. So that's it for today, guys. If you have any questions, feel free to reach out, and I look forward to talking to you guys next week. Hopefully, gas prices will be a little bit cheaper at that point. All right, catch you soon.